Hi, good morning. Welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Indian stock market witnessed correction in a shortened trading week last week. Nifty and Sensex corrected by 1%. Midcap and Smallcap also ended lower for the week. On the sectoral front, if you see, majority of indices were lower. Realty, Bankex declined by 3 to 5% in last week. On the other hand, healthcare posted positive gains. Globally, the markets reacted to news with respect to potential China rescue package. China's central bank said it will cut bank's reserve ratio in early February. Investors will be keeping an eye on monetary policy decision from the European Central Bank and fourth quarter US GDP data in the coming weeks. In the domestic market, stock-specific action will likely continue amid third quarter result announcements. Further, the focus will also be on the upcoming interim union budget in India happening in February. Now, in the meantime, if you see foreign investors' participation, FII sold to the tune of 35,778 crores. However, DIIs bought 19,976 crores so far in this month. Now, let's look at the stock picks and some of the result updates from our research desk. First is result update on Canara Bank. Canara Bank reported 27% year-on-year earnings growth, driven by a marginal year-on-year decline in operating profit and about a 40% year-on-year decline in provisions. Asset quality improvement continued as non-performing loans ratios declined and slippages were at modest levels. Loan growth was healthy, while NIM, that is net interest margin, which is an important indicator for banks, improved marginally, driven by some transient revenues. The bank reported another quarter of greater than 1% return on assets and 18% return on equity in spite of higher provisions for the wage settlement. So we maintain ad rating on the stock with fair value or target of rupees 500. Lastly, our pick of the week is Pidilite Industries. Pidilite reported a well-rounded 10.4% well-rounded growth and a strong EBITDA margin print. We like the setup because of first is rural is growing at 1.5 times the urban, aided by distribution expansion, investment in field on street and product range augmentation. Second is growth categories are growing faster than the core portfolio. Third is the real estate upcycle can potentially accelerate growth of the core adhesive portfolio starting in FY25. New construction accounts for 40 to 45% of sales, and Pidilite typically benefits with a lag of 18 to 24 months in the last stage of project completion. And Pidilite is comfortably placed on profitability after taking price cuts and doubling A&P spends. So we roll forward and revise the fair value to 2,825. Pidilite basically is our preferred pick in the paints or adhesive space. So guys, that's all from my side today. See you again next week. Thank you. Signing off.